In this video, we are going to be analysing BBIG. If you want your own stock analysed, throw it in the comments and we'll get round to doing it. But right now, depending on your broker, you may be seeing BBIG up around 15 to 1600% on the day. Now, this isn't actually what happened. All that happened is they have had a reverse stock split. Obviously, they were at 14 cents. We pushed it up to around 260. It did have a 1 for 20 reverse stock split. So for every for every 20 shares you once owned, you now own one. Now, whenever a company does this from a kind of fundamental standpoint and a catalyst standpoint, that is always a negative and a bad effect. Because why would a stock ever do that? The only reason stocks ever really do that is to avoid their delisting. On the NASDAQ, you have to be trading above $1. So in a case like BBIG, where they started trading below $1, the only way around it, because they couldn't get their company in line in time, was to do that reverse stock split. So that's from a fundamental and kind of a catalyst standpoint what happened. And what's kind of even worse is we are actually hitting 52-week lows today. So all you need to do, and we'll actually open up a calculator to make everything a bit kind of easier to understand. So when you're trading like this, if your broker doesn't update on the day, you want to trade it that same day. All you need to be paying attention to is firstly, where did we close? We closed at 14 cents yesterday. So you would times that by the 20. And you can see we should have opened at 280. That's not what happened. We ended up opening around 260. The reason for that is, again, this is always a negative catalyst because it just is bad for a company. If they're having to reverse stock split, it's never good. So you tend to sell off the news. Even though, again, the news is announced in advance, when it actually takes effect, you tend to get kind of that second move to the downside. So what we can actually do is now work out what is the current price if we were trading kind of the pre-split. Because that's just another kind of helpful thing to understand where we're trading. So you would do the current price, which is $2.35 divided by the 20, gives us 11 cents, well, 0.75. So what this basically means is we're trading at 12 cents, maybe a tiny bit below that 12-cent area. So really, we are at a 52-week low right now. And now, just to go into then, what analysis are we paying attention to is, firstly, what is happening with this stock over the past year. Again, if you're doing a reverse stock split, always a negative reason. So really, these are stocks I only really like to short trade. I think catching them long, you're kind of waiting for that pop, and it's more of a gamble. And if you want to be trading long term, gambling is really not the area to be doing it. So what instead is kind of catch the trend. And if a stock's downtrending this hard over time, really we want to kind of utilize that and kind of catch these shorts. Now, what is really nice with BBIG, and it makes me be able to actually short trade it, is it does have options. Now, this is always going to be helpful when trading short buys, because again, then you can hedge your risk, or you can kind of define your risk. If you're able to buy a call, you do have a max risk in place, which is something I will never not use if I'm trading something like this, which can be a very volatile stock. Trading it nakedly short is just too much risk to really leave on the table. So never anything I would do. So just to say that. Now, what am I paying attention to? So again, we're setting about 12 cents on old price. Now, basically waiting for those pops like we talked about before. If you look on the chart, you can see we do get a number of these. And again, that's why I think the hype has still stayed around the stock, because people are trying to catch these pops. Or if you're left bag holding, you're kind of waiting for one of these pops to actually kind of take you to the moon and get your profits. But again, probably unlikely that we actually see that a massive move. Again, these pops maybe not so unlikely. But, pushing back to probably the 80, 90 cents in an old share value is probably not going to happen. So instead, what I'd be waiting for is pops to kind of recent values. So in that case, that would have been the 22 cents. 22 cents to kind of 23 cent range. And if we broke higher, 32. We also have 41. And those would be the key ones. And obviously, if we went higher, then we start paying attention to those psychological levels, which in old price would have been 50 cents. Again, that is not updated. So what we can do is, what are these levels in current price? So the 22 cents we just times by 20, and that would be $4.40. So really what I'm paying attention to on BBIG is, until we hit $4.40, there is no trading opportunity for me to be able to take, because again, I'm not shorting it at their lows, because again, when you do get that pop, you're going to be down. But if we can kind of pop again, that still requires about 100% move from where we are now. There is a lot of money to be made, and especially if we can hedge that risk or define that risk, it definitely makes it a potential trade to be looking at. So that's my main plan on BBIG. What we will do is later this week or going into next week, we will make an updated video on BBIG to include the standard deviation channel levels, because again, there are other levels to be paying attention to which can be very strong. But again, we need the price to update historically for us to be able to use deviation levels. So again, that should happen by tomorrow. Anyway, I hope you enjoyed the video. If you did, why not drop a like and subscribe and check out this analysis video.